Hello, good day. Welcome to another session of Fog Accountancy Tutorials. Today we are going to look at accounting errors, how to correct them by means of the suspense account as well. So the topic is correction of errors and suspense account. The errors are going to be corrected by means of the journal, and then we're also going to make use of the suspense account. First of all, we want to ask ourselves, what is an error? When we come to accounting and we say error, what is an error in accounting? An accounting error is either an omission, a misstatement, or a wrong entry in the books of accounts. So once you make an omission, there is a misstatement somewhere or a wrong entry, then it is an error. So that is how an error is defined as far as accounting is concerned. Now, we have two broad classifications of errors. Two broad classifications. Now, we have errors that affect the agreement of the trial balance and errors that do not affect the agreement of the trial balance. And so, we talk about errors that affect the agreement of the trial balance. And then we have errors that do not affect the agreement of the trial balance. So basically, we are looking at errors in the double entry system. That is what we are looking at as far as this topic is concerned. We are looking at errors in the double entry recording up to the extraction of a trial balance. Now, all those errors that is likely to be committed, we are saying that there are some of those errors when you commit them, the trial balance will fail to agree. And then there are some of the errors when you commit, the trial balance will still agree. Take note that all errors affect the trial balance. All errors affect the trial balance. So we are not saying that there are errors that affect the trial balance and there are errors that do not affect the trial balance. No. What we are saying is that we have errors that do not affect the agreement. So the key word here is agreement. So it is not about affecting it, because the trial balance can agree with different figures. So still you can get a balance, that is, you can balance the trial balance, but you may still have committed some errors somewhere. It is not a guarantee that there were no errors in your recording. So what we are saying is that there are errors that affect the agreement. Some of them, even though you commit, the trial balance will still balance. And some of the errors will not make the trial balance. How is this done? Now, take note that in order to understand this topic very well, you need to go back and revise your notes on double entry recording. Because I always say that this topic is like a senior brother to the double entry system. If you don't really understand your basics of the double entry system, the double entry rules, how to do the recordings, when to debit, when to credit for each class of account, you will not really understand this topic. Alright. And so we have these two classes of errors. And so we are going to look at some of the errors. Each error has a name. Most of them, especially 90% of the errors have names. But there are some other errors you may have that you may not have specific names for it. But once you know your double entry, you can still correct them and give them a nice narration in the journal. Now, some errors have names, most of them, and so we are going to look at some of the errors that have names and try to explain them. Now, some of them are classified under errors that affect the agreement of the trial balance, and some of them are errors that do not affect the agreement of the trial balance. And so what we are going to do is that we are going to first of all take the errors that affect the agreement of the trial balance and trying to understand them very well. So we are taking the errors that affect the agreement of the trial balance. Errors that affect the agreement of the trial balance. I'll talk about four main errors here that affect the agreement of the trial balance. Before later, I will talk about any possible error that may not have a name or may not have been named in my four. But basically, there are four errors that I'm going to talk about. Now, the first one is called error of single entry. Error of single entry. Now take note that the theory part of this is very important. Understanding these errors helps you in your calculations as well, because you should be able to identify the errors by their names. Now, error of single entry. What is the meaning of single entry? We are saying that accounting says we should go by the double entry. The dual concept means that every transaction should be recorded twice, meaning that for every transaction there should be a debit entry in an account and a credit entry in another account. Now, error of single entry means that you only kept one aspect. So we have the dual aspect concept where we have to keep two aspects, but here you kept one aspect. Maybe you did a debit recording, but you forgot to go and do the credit corresponding recording, or you did the credit recording but you didn't do the corresponding debit. And so the error of single entry, I define it as, this is when a transaction or only one aspect of a transaction is recorded. This is where you do only the debit or a credit entry and you fail to do the corresponding entry. That is what we mean by error of single entry. And so when you do that, we are saying that this error will affect the agreement of the trial balance. Because the reason why the trial balance balances is that every entry you do in a debit, you do a corresponding credit entry as well. And so once you are balancing of the account and you are extracting a trial balance of debit and credit balances from the same entries that you have made, then it is obvious that because the moment you take any figure you take to a debit, you take the same figure to a credit somewhere, whether you are right or wrong. It means that the trial balance will in effect balance because there was a corresponding effect of it. Now, single entry means that you did one aspect and you forgot to do the other. And so when you are adding up the debit and credit, the credit side which was not recorded will be short of that amount. And that is why we are saying that when you commit an error of single entry, it will make the trial balance not agree. So that is the first error that do not make the trial balance agree. When you commit this type of error, then your trial balance will fail to agree. All right. The second error that I want to introduce to you is error of partial reversal of entry. Partial reversal of entry. Partial reversal of entry. Now, with the error of partial reversal of entry, this is the meaning. We know that we are supposed to do double entry. We are supposed to debit an account and credit another account. Now, what you do is that if you debit one account and going to the for example, if you have sales to Yao on credit, and we know that we are debiting Yao and we are crediting sales account. If we debit Yao account and going to credit sales accounts, we forget and we debit sales account. What we would have done is that we have done a double debit, or you could do a double credit. That means that both entries ended up on the same side of the two accounts, and that is what we call partial reversal. Now it means that one of them is correct, but for one part you have reversed it. You should have gone to the credit but it came to the debit, or you should have come to the debit but it went to the credit. So you have done a partial reversal. You didn't do full reversal. Only one part is wrong and one part is correct. And that is why we call it partial reversal of entry. When such an error occurs, obviously the trial balance will not balance because we need a debit and a credit corresponding entry to make the trial balance balance. So if you are doing two entries for the debit, then you are shorting the credit side by the double effect of it. And so your trial balance will fail to agree in the end because you have overstated the debit side, leaving the credit side. And that is basically how it's supposed to be done. Now, as I explain the errors, let me try making scenarios on some ways of correcting them if you want to. If you want to correct this error, for example, it is just one side that has been reversed. And so what you have to do is that you have to go back and then credit that side. But remember that if you have, let's say if it was sales account that you were supposed to credit with 100 and you came to debit with 100, that means that instead of crediting, you have rather reduced the value by 100. If you go back and correct by writing 100 here, what you are doing is that you have just cancelled off the 100 that was there. So for this type of error, if you are correcting, you double the amount. So if it was 100, you have to credit it by 200 so that the first 100 will cancel it off. and the second 100 will make it stand. Other than that, your trial balance will still not balance. And when we come to the single entry, to ask for the single entry, it's very simple. Once you fail to record, you just go and record the same amount there, and then it will still stand. All right. So that takes us to our third type of error, which we call error of transposition. Transposition of figures. Now look at the name, transposition. Transposition. Trans has to do with change. And so basically we are talking about changing of positions. And so if I'm recording 69 and in one side of the account, and instead of 69 I write 96, what I have done is that I have just interchanged the position of the figures. And this is what we call error of transposition. So sometimes you see, instead of 112, you see 121, something like this. What we have done is that we have changed the position of the figures. And these errors can be done commonly, especially when you are tired. And so what we do is that when there is an error of transposition, we say that it does not make the trial balance agree. We call it error of transposition because this error is committed only on one side of the account. The corresponding effect is not there. So for example, if you pay cash or you pay rent of 96 and you record in your cash book as 96, but in the rent account you make it 69, that is what we call error of transposition. One side was recorded correctly and the other side was not recorded, it was reversed. And so that transposition will always lead to either an overstatement or understatement of the figure. So if you say 96 and then you write 69 instead of 96, these are not the same. It means that there has been a shortage. Instead of 96 you wrote 69. So there is a shortage of 27 cedis if you take the difference. And this 27 cedis will be the difference on the trial balance. It will not make the trial balance agree because the other entry is done correctly. Why is it that one side has been in shortage? So remember that a transposition will always end up as an overstatement or an understatement. So the treatment is that if it is an understatement, just go back and record it and top it up. But if it was an overstatement, then you take it out. You reduce the account by the overstatement by recording in the opposite side. I always want to say that in accounting, when we are adding up, if you want to add up to the debit side, you record there. But if you want to subtract from the debit side, you record at the credit side. So opposite recording means you are subtracting from the other side. So if this side was short by 27, then you have to come and record the 27 there so that it will add up. But if it was an overstatement, for example, we were supposed to rather write 69 and then we wrote 96, then it means that we have overstated this account. So the extra 27 will be recorded on the opposite side, which is the credit side, in order to reduce the account. And that is basically how it's going to be corrected. Okay, so that is with the error of transposition. Now the last but not the least when it comes to this is error of casting. Error of casting. Now when I say error of casting, there are two main ways that the casting may go. So it's either you are casting it up or down. So under the casting we have overcast and undercast. These are the two errors of casting. So when I say error of casting is when the figure is either overstated or understated when recording on one side or one aspect of the entry. So what we do is that overcast is when maybe I'm supposed to write $10,000, and instead of $10,000 I write $100,000. I just added a zero, but it has resulted in an overcast, and the difference is so huge, $90,000. So that is what we mean by overcast. Undercast is also the opposite. When I want to write 1,000 and I write $100, that is an undercast. And like I told you, that the treatment for overcast and undercast is just like that of the transposition. You always look at the difference and treat the effect of the difference. So if the difference is such that it is resulting in an undercast, then whatever difference you are getting, add it to the side of the undercast. If it is the debit side that is being undercast, you go and record the difference there. If it is the credit side that is being undercast, you do it there. Now, if it is overcast means that you have supposed to subtract it off. And remember that when you are subtracting off, I said you do what? You record on the opposite side. And so, basically, when it is an overcast, if it is a debit side that has been overcasted, the entry will be made on the credit side of the account. If it is a credit side that has been overcasted, the difference will be made on the debit side rather. Just like the transposition. And so, casting and transposition is very similar. The only difference is that you will see that with the transposition, the figures are just interchanged. Okay, but the error of transposition is still part of the error of casting somehow because the treatments are similar. Now, taking note of these 4 errors, I would want to add that these 4 errors will be corrected by the means of a suspense account. Now, errors that affect the agreement of the trial balance will be corrected with the suspense account because most often they do not have other corresponding entries to be made. So for all these entries that I am making that you enter on the side of the account, the name or the narration for the account is always suspense. You understand this as we take examples. I want to take my time and go through this topic. It's quite a lengthy topic, but I'll go through it bit by bit. And so we are going to use the suspense account to correct all these errors because they have nowhere other entries to be made elsewhere. And so basically all the errors that affect the agreement of the trial balance will go through the suspense account. And the errors that will not affect the agreement will not go through the suspense account. And that is the key, one of the keys to understanding how to solve questions of this area. And so I think we are okay with these errors that affect the agreement of the trial balance. We are going to look at errors that do not affect the agreement of the trial balance. Okay, so we are looking at the errors that do not affect the agreement of the trial balance. Now, these errors are errors even which when committed, the trial balance will still agree. It will still balance, and so you think that you are all through. So sometimes you go to the exam hall and you come out and everyone is saying it's balanced, but they have different figures. Most of the time, they committed errors like this. So errors that do not affect the agreement. The first one I want to talk about is error of omission. Error of omission. Error of omission. This is when a transaction is completely omitted from the books. The transaction is not recorded at all in the books. That is error of omission. In this case, the transaction was not recorded, means that the debit and the credit entries were both not made. So you omitted the whole transaction, you didn't record it at all. And still the trial balance will agree because it doesn't touch the trial balance. The trial balance is looking for a debit and a credit to make it agree. So if you didn't do both, bingo, it will still agree because there was no effect on both sides. Okay, so when there is an error of omission, the trial balance will still agree. And that is when you didn't record the transaction at all. And please take note that sometimes you go to the exam hall or you see questions and then you see omission, but they may not be error of omission. They will intentionally tell you that amount of this has been omitted from the books. Please, it is not all omitted that is omission. Take your time and analyze the question very well. This omission I'm talking about here is when the transaction was not recorded at all. But if one part was recorded and one part was omitted, even though they use the word omission, it becomes a single entry because one part was recorded and the other was omitted. So let us take note that when you see omitted in the question, it is not necessarily error of omission. All right. So this is error of omission. And for this error, if you want to correct it, it's simple. Just come back and do the double entries. So if it is paid cash to AMA, credit cash, debit AMA, it was not made. So come back and then credit your cash and debit your AMA. So that is basically how error of omission will be corrected. Come back and do the entry. It will not go through the suspense account because it has 2 entries to take care of it. 2 accounts to take care of it. Then the next one is error of commission. Error of commission. And take note of the way we spell commission and omission. Omission is one M, commission is double M, but both of them has a double S. So take note. Error of commission. This is when the transaction is recorded in a wrong person's account or a wrong personal account. Alright, this is when the transaction is recorded in a wrong person's account. So let's say you sold the goods to Edu, but you have another customer in your books called Aju, and the spelling confuses you, and instead of recording it in Edu's account, you record it in Aju's account. That one, both of them are personal accounts, but you have recorded someone's transaction for another one. Both of them are debtors. And so the error of commission is when you record a transaction in a wrong personal account. So once it's a wrong person's account, then it's commission. And this error will not cause agreement, will not disturb the agreement of the trial balance. It will still balance because you have already made one entry correct. It's just that in the personal account, instead of debiting Adu, you debited Aju. So what you have done basically is that it's just a raw Peter to pay for. And once an entry is made at the same side, the trial balance will still balance. And when it happens this way, you see that correcting it will not go through suspense account. You still have two accounts to make the correction by robbing Peter to pay Paul. So what you do is that you credit the account that was debited wrongly and you go and debit the one that was supposed to be debited. And that is basically what the error of commission is all about. So the next error here is the error of principle. Error of principle. Now, the name suggests what it is. Principle. It means if you commit this error, you don't know your basic accounting principles. Now, error of principle is when the transaction is recorded in a wrong class of account. So you were supposed to record in a real account and recorded in a nominal account. And that means you don't know your principles. That is what it means. Record in a wrong class of account. Then we call it error of principle. So, for example, if you paid for motor expenses, motor van expenses, and it was recorded in a motor van account. Motor expenses is a nominal account. Motor van account is a real account. So if you mistakenly record motor van expenses into motor van account, then what you have done is that you have committed an error of principle. Now both accounts will be debited. If it was motor van expenses, it would have been debited, and then the motor van account itself is also going to be debited. And so this will not affect the agreement of the trial balance because the item still ended up on the debit side. When we have not spoken about the other entry, it means that that was done correctly. So always assume that the one that was not spoken about was done correctly. And because there was a debit and a credit entry, still the trial balance will balance. But we still have to correct this error by transferring it from motor van to motor van expenses. And so that is basically how we are going to correct this. So that is error of principle. The next error that I want to talk about is error of a complete reversal of entry. So error of complete reversal of entries. Complete reversal of entries. Now, this is the opposite of the partial reversal. Now, with a partial reversal, I told you that only one aspect is reversed. Complete reversal means that you have done a double reversal. You were supposed to debit A and credit B. You ended up debiting B and crediting A. You reverse both. And that is what we call complete reversal. It's not like the partial. So this one, the trial balance was still balanced because, yes, there was still a debit entry somewhere and there was a credit entry of the same amount. So it was still agreed. But then you have to correct it by transferring it up. Now, like I told you with the partial reversal, if you were supposed to debit A by 100, or let's say by 1,000, and credit B by the same amount, and you ended up doing the debit at B and the credit at A, and you want to correct it, you just have to restate it where they are supposed to be. But this is a reversal. Remember that the amount is already there, imaginarily. So what we are going to do is that we are going to double the amount. Instead of the 1,000, we are going to write 2,000 here in the name of B, And I'm going to write 2000 here in the name of A because the thousands were already here. So that in effect, we will still have the 1000. So take note that the only time you will double the amount is when it is a reversal. If it was not a reversal, you don't you don't double the amount. So take note very well that we double the amount anytime it's a reversal. Whether it is a partial reversal or a complete reversal, the correction will demand that the amount involved will be doubled before it's taken to the opposite side. But the complete reversal will not affect the agreement of the trial balance because it will involve both sides. Alright. The next error is the error of compensation. Compensation. When we say you are compensating, what's the meaning? Now, error of compensation is when two or more errors cancel out each other so that they leave no effect on the agreement of the trial balance. So there's a cancellation. For example, you overstated account A, the debit side of account A, by 100. Then there is an account C somewhere that by mistake also you credited it with some 100 also. You were not aware, but such that this error will cancel off that effect. So we call it compensation. So once you make an error on the debit side of an account and it gives you a difference of, let's say, 100 or 20 cedis, 120 cedis, and if you go to another account B and you make another error that gives you a credit difference of 120 cedis, then it means that on the trial balance this 120 will cater for the other 120. Even though it's an error you have made, the totals of the trial balance will be okay. And that is what we call error of compensation. So compensation errors cancel out each other so that they will leave no effect on the agreement of the trial balance. And when you are correcting such errors, you just go back and take them off where they don't belong using your normal double entry principles. And when we finish explaining the rules, in our next video we are going to take questions and we'll understand how to tackle practical errors when we meet them. So that is with the error of compensation. Then we have the error of duplication. That one will also not make the trial balance, will still make the trial balance agree. Now, error of duplication is when you record the transaction twice or even more. For example, you made sales to Kwame. You debited Kwame, you credited sales this day and you closed for the day. Tomorrow you came in the morning, you want to begin your work. You forgot that you did that entry and you go back again, debit Kwame again and credit sales again. What you have done is that you have recorded the transaction twice. So you have a double debit and a double credit for the same transaction. And that is what we call duplication. You have duplicated the entries. And so error of duplication is when a transaction is recorded twice or more in the books of accounts. That is basically what error of duplication is about. Okay, so in correcting the error of duplication, what you do is that you have to cancel out one. If it was a double entry, you did it twice, then cancel off one effect by recording it in the opposite side. Remember that I told you that if it's an overcast, the correction will be done in the opposite side of the account. And so it means that if it was debit, you did a debit and credit for a double amount, then you record on the opposite side by reducing it by just one of them, and it will cancel it off in effect. That is how you do correction for error of duplication. And then finally, we want to talk about the error of original entry. Error of original entry. Error of original entry. Now, error of original entry. Looking at the name, it suggests that it's coming from the books of original entry. These are errors that are committed in the day books or the journals, and they are carried as such to the ledgers. And so when you are preparing your day books and you commit an error, and then you don't see to correct it over there, and you are posting from the subsidiary books to the ledgers, and you post the error, then it's an error of original entry. So for example, you know the day books don't follow the double entry system. So if, for example, you have, let's say, January 1, this is a sales journal, and then you made sales to Kofi of, instead of 100, you wrote 1,000. Now, instead of 100, you wrote 1,000. This error has been made in the day books. It doesn't go through, it doesn't follow the double entry. But when you are posting to the letter, you are going to open account for Kofi and account for sales, where you are supposed to debit Kofi and then credit sales. Now, the original transaction is that the invoice amount is 100 cedis, but you ended up making it 1,000. And so what is going to happen is that you are going to record the same 1,000 here for Kofi and the same 1,000 for sales, because this book of original entry was your point of reference. You didn't go back to look on the original invoice before you did the posting. So you have done an error. This error is called error of original entry. Did you notice that the 1,000 appeared on both sides of the accounts, meaning that it will not affect the agreement of the trial balance? But looking on the original invoice, the amount is 100 cedis, and we did it, we recorded 1,000 cedis. And so this error is called an error of original entry. And when this happens and you want to correct it, it's like an overcast. Because if it is an undercast, you record it at the same side. If it is an overcast, you bring it to the opposite side. So the difference of 900, let's assume I want to correct this. I'll write 900 here in the name of sales, and I write here 900 in the name of Kofi. So this one will not go through suspense, so that the balance carried down of this account will be 100, and this will also be 100, meaning that we have corrected that anomaly. That is basically what we do with the error of original entry. Let me also add this, that when we are solving questions, let us be careful that some errors that are not original entry should not be taken as original entry. For example, if you see something like the sales journal or the sales day book has been overcast by 1,000, the purchases day book has been undercast by, let's say, 200. Those ones are not errors of original entry, even though they bear the names of the books of original entry. If you are told that the sales day book has been overcast, they are not talking about just one entry. They are talking about the whole total. So if the total was 100 million, then it has been overcast. Then we are not talking about the entries. So we are talking about the whole total. And sometimes, instead of preparing the sales account one by one, most accountants prefer to just take the total. And when they get to the sales account, they'll just go and put the total there as sundries. So what we do is that if you overcast this, for the individual accounts, you look here and then you make it. But if you overstate the total, then it is only the sales account that has been overstated. And so if you are told that the sales account is overstated or the purchases account is overstated, it is the same as saying the sales journal is overstated or purchase journal is overstated, because the total of the sales journal is posted to the purchases account. So anytime you are solving a question and you see sales journal overcast, in your mind, erase off the journal, just make it sales account overcast. If you see purchases journal undercast, just erase off the journal, make it purchases account overcast. Those errors are not errors of original entry. Those ones are errors of casting, and they will affect the agreement of the trial balance. Alright, so that is basically that. So we have looked at 4 errors that do not that affect the agreement of the trial balance. Sorry, the errors affect, and then 7 errors that do not affect, making them 11. Okay. So going forward, we may meet other errors that are not mentioned from what I have just explained. But let us still master our double entry concepts. And when we are masters of that, I'm sure that there is no error that we cannot correct. And I'm sure we will narrate them according to how they are said in there. But before that, I want to explain the suspense account before we are done. The suspense account. What is the suspense account? The suspense account is a temporary account. So what I mean that by temporary is that when we prepare the suspense account, we just wait to correct the errors. And after the errors are corrected, we close it from our books. So the suspense account is a temporary account where the difference of the trial balance is kept or placed, pending the location and correction of errors. A temporary account where you put the difference on the trial balance. And so if you have a trial balance like this, and the debit side is 1,000 and the credit side is 800, that means you have a difference. It didn't balance. The difference is 200. So you are going to open an account called Suspense account, and you are going to put the difference of 200, the side where there was a shortage. So if the credit side was a shortage, you call it difference in the books. Then you put it there. Then you go back into your books and then take a look at your transactions one by one and see which ones you made errors. And if the errors will affect the agreement of the trial balance, the entries will be posted to the suspense account. And at the end of the day, the suspense account will be closed on its own, if only you make everything correct. And so what we are saying is that a suspense account is a temporary account where the difference on the trial balance is kept pending the location and correction of errors. And that is how we define a suspense account. Ladies and gentlemen, this brings us to the end of this part. Now, in a part 2 of this lesson, we are going to look at practical examples on how to correct errors and how to use the journal and the suspense account. Remember to subscribe to the channel, and then don't forget to ring the bell notification. Thank you so much.